Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets. However, before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production, or recognition of any of the patterns, levels, analysis, or any related items on these, my charts. This was all authentic intelligence, all my own original work, as I think you deserve to have that. So with that,
Euro dollar. A bearish engulfing pattern plus a bearish open and close black Mariposa on Friday, after the previous session's indecisive spinning top that was also a bullish harami. Prices dropped down to the congestion between the June 2018 high at 118.51 and the June 25 high at 118.29. Below this we have a fairly clear zone down to the combination of the green short medium moving average currently at 117.05, the October 21 high at 116.92 and the mauve medium moving average currently 116.76. Overhead, the next resistance is the bright pink neckline extension to the April to May 2020 reverse head and shoulders pattern, which is currently at 119.97. My apologies on that. Overall, the market remains within the mid 2025 based bright red shallow bull channel. And that's currently 115.88 to 120.67, and that's been the main showrunner for this market. Finally, in January, January has become a monthly key reversal up. And so far today, not much. We're either side of the June 2018 high, which is where we closed on Friday night. Cable, aka sterling against the US dollar. A bearish long black Mariposa on Friday after the previous session's indecisive doji cross. We finished up within a fairly free area between the overhead resistances of the September 25 high at 137.26 and the earlier July high last year and January 2022 high, both at 137.88, as well as the bright green 2021 to date downtrend currently at 138.68. Plus, I suppose, also the October 21 high at 138.33. Meanwhile, below, we have support from the February 22 high at 136.43 and further support 136.21, plus the now breached and possibly broken very shallow dark blue bear channel dating between early July to early August last year through to late January this year, and that's currently 129.95 to 136.22. Now, I said last week, and I quote, "This action since the double bottom seen in November last year is looking increasingly like a possible bullish halfway hesitation. If that is to be the case, then there is the opportunity for a move up to the 138.50 area overhead. More on this as it develops." End of quote. Well, this has developed and the market grasped the opportunity and reached 138.50. But we have reverted back down as soon as that was reached, so I'm wondering if the prices might wish to drop back down back within the dark blue bear channel again. And so far today, well, a small attempt higher and lower within the clear area, but not really showing much direction just yet. US dollar against the Japanese yen. A third countering bullish engulfing pattern and bullish closing white Mariposa on Friday, after the previous session's counter-to-counter bearish harami. Prices punched up and closed over the mauve medium moving average, currently at 154.12, though not as far as filling in the overhead weekend gap from the previous week between 155.34 to 155.62. Overall, we are back within the previously breached bright red April to November 2025 bull channel, currently at 150.63 to 157.58, though as I said last Friday, I'm beginning to wonder if we might have the start of a slightly sharper and more acute bull channel. And that's originating from September and November 2025 to date. And that's currently 152.34 to 160.04. In the bigger picture, we had a monthly key reversal down here for January. Now, so far today, well, a follow-on higher, filling in most of the gap on the top side, but pulling back down before fully doing so. US dollar against the CNH, the offshore Chinese yuan. A bullish opening white Mariposa on Friday after the previous session's indecisive doji cross. We're out now, above and out, of the recent mid-December last year to late January bear channel, and seemingly within a new dark blue late December 2025 to date bear channel, which is currently 693.10 to 696.72. This is a tempering of the bearish incentive and has been brought on by the market touching and rejecting last week the bright red extension to the upper trend line, which is currently at 693.04 of the May to August 2022 ascending triangle. Additionally, on top we have the September 24 low at 696.90. Now, so far today, well, an attempt higher after a lower opening, though seemingly less incentivized to try that much higher, as the dark blue upper bear channel line has capped prices. However, the market initially seemed not that keen to try lower, but we have extended and we could be on for potentially a daily key reversal down today. US dollar against the Brazilian real. An interesting bullish opening white Mariposa and bullish engulfing pattern on Friday, if only just on the latter. Prices rose up and got themselves caught with the overhead congestion of the interesting small but significant band between 526.20 and 527 even, as well as the important declining dark blue middle time, which is currently at 525.75, and that's of the mid-December 24 to mid-April 25 bearish shift pitchfork. Now this bearish shift pitchfork is still the showrunner for this market. US dollar against the Mexican peso. A bullish opening white Mariposa and third bullish white soldier on Friday after the previous session's indecisive spinning top pattern. Prices moved up and closed on the July 2017 low at 1743.74 and back within the small dark blue November 2025 to date based bear channel. It's currently 1734.49 to 1779.55. This was not a too well defined bear channel, but it's still there and has been the showrunner here since late last year. The next congestion further up is the narrow band between 1756.93 to 1759.58, whilst below we have the congestion between 1703.89 to 1709.23, and that's made up from the April and March 2016 lows respectively. So far today, a move up to test the overhead congestion between that 1756.93 to 1759.58 area, before prices pull back down to the July 2017 low.
Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.